Okay, hello traders and welcome to our live trading video session today. It's Stu Napan here, founder of Master Markets Illustrates Conference and the Traders Open Day. So today we're just testing out and pioneering out today on these live trading sessions that we want to be doing every Wednesday. Okay, so today I just want to impart with you just one very simple knowledge for today. So what I want to be actually doing, so let me actually just share my screen and let's go into the markets. So let me just get this right here. Let's get all the technicalities right. So let me just share the screen. So there you go. Right. Hopefully you can see this all right. Now, I just want to impart with you for intraday traders. Okay, intraday traders. I just want to talk about range today. Range and consistency is what we are going to be talking about today. Very quick video, all right? Right, so for here, for example, as you can see on the cable, if I want to find out the range, as intraday traders, you should know your average range for the day. So for example, if let's see, if I hover my mouse over here and if I got an ATR 10 over here, which is the average true range. Now, for those of you beginners out there who's not sure about what I'm talking about, definitely go and watch our 5-part video series. For you intermediate traders, you would know highly probably what I'm talking about, just average true range, the average of the last 10 days, okay? So if you take a look, if I hover around, you can see over here that's 88 pips over here, 92, and then you can see 104, right? So usually you just take the average true range of yesterday, which is 88, and then what we then do is usually we take an 80% range of that. So 0.8 times 88, 70.4. Let's just say 70. So you see traders, that's how we get our range to trade for the intraday. So once you capture the 70 pip range, you're out of the market and you take your profit and you go. So for example, for today's bar, if we, let's say we take a look on the 1 hour time frame, all we would look out for, let's say if you didn't take a look, let me just move this aside here. So let's say this is when you entered, let's say, for example, right? And then to fall from the low of today all the way to the high, that's 37 pips, isn't it? Remember what I told you? You're looking for a 70 pip range. So 70 minus 37. So how much would that be? Go for it. Have a think. So that would be 33 pips, isn't it? So 33 pips is what we're doing. So then what you can just do is you can extrapolate out to 70 pips over here. 3703, 13703 is what we are looking for. And I would just put my mark over there. So once I've done that, then what you would do, I can just put a green line over there. And that's pretty much that, okay? So you can see over here, then the price goes up and it goes past that line. You're out, you took your range and you're out, okay? So this is what I mean by range, okay? So once you capture your range, you're out of the market, okay? So that's what we mean by that. Let's do one more exercise. Let's, as I said before, if you're trading for today, take the ranges of yesterday's bar. So let me just move this out over here. Take the range of yesterday's bar, which is 44 pips, right? 44. Then again, as I said, do 0.8 times 44. Okay, that's 35, isn't it? So 35 is what we'll be going for. So then what you guys then do is that, let me just remind myself what that was. So 0.8 times 44, that's 35. So let's say you came in at this green line over here, and then you can see that 35, it's quite near to that green line over there. So 35 is about here. 0.8901 is what you should be looking for. So once you capture that, then you're out of the market, depending on wherever that you enter based on the range. Let's do one more again. So for example, if you did this now, we got looking at 64 pips here, isn't it? So 0.8 times 64 again. So how much would that be? So 51, right? So once you do 51, so whichever way that you're taking the direction, whatever way it is, let's say for the bottom here, 51 would be around here, 12107, okay? 12107. And once you capture that, you will be then out of the market. Wherever that you enter, once you capture that, you'll be out of the market, you captured your range. So that is what we mean by capturing the range for the day. And as intraday traders, that is very, very important. Okay, capturing the range for the day. And once you capture it, you're out. That's one objective of your strategy. You can design one strategy just on that range, and that's pretty much that. And once you capture it, you're out of the market. So that's how you would do it. I'll usually tell you all to go for 0.8 times, but we found out from our research that 80% of them do get there. Okay. So that's what I will leave you with. Of course, a lot of you may be asking is, Thiru, but how do we enter? What do we trade manage and all that? Yes, we will cover that as we go along in the next few weeks on trading sessions, and I impart with you the knowledge in real time as well. Just one thing with you, I will just leave with you as we go along is you see, for example, today, however, do remember it depends on how you are trading, right? So for example, we actually, as of now, we actually hold a position here on cable. We took on the high and the stop loss for the low. Some of you are asking, oh, Tiru, you already went all the way up. Why are you still holding on to this? Remember, as I said, every strategy will have a different objective. So for example, even if you did take a look at this, even at the moment over here, you can see over here, we are still in a very, very small negative position at the moment over here, as you can see, right? So, but why would we hold on to that? Because for the C word, the consistency and the objective of this strategy is very, very different. The objective of this strategy over here, what we are really taking a look at, is to ride this move for at least for about 2 or 3 bars. It's totally a different objective. So every strategy is going to have a different objective, and you once you know your objective, you have to follow that consistency throughout, because the consistency is required for the cumulative set of trades to give you the final net profit. Okay, so that's what that is about. Right, so I'll leave you with that. But do remember, for intraday, one of the really critical, important things that you can always be looking at is the range. And once you capture the range as an objective, market. Okay, so I guess that's pretty much that from me on this video. Of course, if you got any questions at all, please put it into the comments and all of that, and just email us whenever you got any questions at all whatsoever. Forward, we are always here to help you, to serve you, and to spread the truth of trading further. And all the thing is that for those of you beginners, go and watch our traderstarterpack.com video series. Those of you intermediates, watch the Trade Like a Master video series. There's a lot of content that we've done for you just to help you on this journey to get consistent and to get achieve your peak performance, to achieve your peak performance level in your trading. Okay, that's all from me for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.